India is preparing for a major shake-up in its income tax rules. The government has released a new set of draft rules. They are expected to take effect later this year. And what do these rules propose? Well, quite a lot of things. But one big shift involves your PAN card. PAN is your permanent account number. It is used to track your tax and financial transactions. Right now, there are limits on when you must provide the PAN card. Only in certain situations you're expected to, or you're required to provide the PAN card. The government wants to change those limits. This is on things like cash deposits, vehicle purchases, property deals, among other things. The thresholds for all of these could also change. The goal is to make compliance easier for smaller transactions, but keep a closer watch on larger ones. So what exactly are these new draft rules and how will they affect you? Here's a report.
I propose to provide tax holiday till 2047.
India is preparing for one of its biggest tax rule changes in decades.
To customers.
The government has released the draft income tax rules for 2026. They are meant to replace the current rules that date back to 1962. The goal? Simplify compliance, modernize reporting, and make tax tracking reflect today's economy. They are scheduled to take effect from the 1st of April. At the center of the overhaul is the Permanent Account Number, or PAN. It will become more central to your daily transactions, but the thresholds for quoting it are changing, and the shift is dramatic. Let's start with cash transactions. At present, depositing more than 50,000 rupees in one day requires PAN. The draft shifts this to a yearly calculation. PAN will be needed only if total cash deposits or withdrawals cross 10 lakh rupees in a financial year. This reduces checks on small daily transactions. Routine banking gets easier with fewer checks on small daily transactions. But larger cash activity? That will be tracked very closely. Motor vehicles purchases will also see a change. Today, PAN is required for most transactions. The new rule sets a threshold. Only purchases above 5 lakh rupees will need your PAN. High-value motorcycles now fall under this net. Buying property? The PAN requirement is proposed to rise from 10 lakh to 20 lakh rupees. The change reflects rising property values across cities. Hotels and events see a similar increase. You'll need PAN only when payments exceed 1 lakh rupees. The current limit is 50,000 rupees. Insurance, however, gets tighter. PAN may become mandatory when opening an insurance account. Earlier, it was required only if premiums crossed a set annual limit. The draft rules go beyond PAN. They also address employer-provided benefits. These include things like free meals at work. Some of these benefits are taxed today after a certain value. The proposal raises those tax-free limits. This means a larger portion of these perks may not be taxed. The draft also expands the list of metro cities for house rent allowance, or HRA. Currently, only Delhi, Mumbai, Kolkata, and Chennai qualify as Category 1 metro cities. The new rules add Bengaluru, Pune, Ahmedabad, and Hyderabad to that list. This means employees in these cities can now claim higher HRA exemptions. Crypto exchanges, meanwhile, face expanded reporting requirements. They may need to share transaction data with tax authorities. This is meant to improve traceability of digital assets. The digital rupee is also being formally recognized as a valid payment method. And then there's the cleanup. The number of tax rules and forms is being reduced. The intent? Simpler filing and easier compliance. So what does this mean in daily life? For smaller transactions, paperwork could reduce. For larger transactions, tracking will tighten. The government says the aim is balance. For now, these are still draft rules. Final changes may come after consultations and public feedback. But when implemented, these rules will reshape everyday life in India.